What is going on, everybody? Welcome to this video. In this small little series that I'm going to be doing, I'm basically just going to be breaking down my quarterly theory PDF that I built for you guys here. It goes through a bunch of stuff, a whole bunch of stuff. I think I'm going to do about 10 pages per video. Keep it pretty basic, explain it, do these things uncut, fast. We're just going to roll, okay? So, starts off, logo, whatever, easy stuff, boom. Quarter one dictates the entire cycle. Now, what does this mean exactly? Well, quarter one does two things. Number one, it is the DFR. DFR is calculated as essentially you cut quarter one into thirds and third 2 and 3. You put your standard deviation on those 2/3, and you can somewhat estimate or guesstimate in some forms where price will go. If it lines up with liquidity, that could be a good target. The second way that quarter one dictates the cycle is that if quarter one is X, then you will likely see accumulation the next cycle, manipulation the next, and distribution in the next. But if quarter one is A, then you get the manipulation, then distribution, then X, right? Now, that says right here, orange letters, two main profiles, we covered that. AMDX, boom. So this could be A, this could be M, this could be D, X, or X, A, M, D. Every quarter two open is called a true open. Quarter two, once this opens here, I'll show you my chart here in a second. We'll go to a 15-minute chart here. And on the 15-minute, the midnight candle is the true day open. So right here would be our true day open. That is because Asia here is quarter one. Quarter two, London, opens at midnight. That's the true open. Now back here, you want to be trading in M, manipulation, or D, distribution. So if you see X in quarter one, you want to be trading quarter 3 and 4. If you see A in quarter one, you want to be trading quarter 2 and 3. Makes sense. Now, correlated market pairs. We have Euro, Pound, Dollar Index, basic FX, basic indices, NQESYM. You can also add the Nikkei depending on the correlation data. You can look on mrci.com, I think, and there's a bunch of data there you can look over. Crypto triad, I like these three the best. Total 3 I've heard been used a lot in quarterly theory, but I seldom use it. Crude oil, CL, RB, HO, that's essentially gasoline, harbor gas, like energy triad is pretty basic. Metals dyad, I wouldn't go outside the dyad here because a lot of people get stumped when using copper and it becomes a whole mess. So yeah, stock triad, moving on. NVIDIA, Microsoft, Apple. You can also use NQES and NVIDIA. Like you can mix the stock triad and the indices triad. It's really cool. I would recommend that. Options triad, pretty much just the same as the indices triad there, but just the options contracts. Agricultural dyads 1, 2, and 3. Pretty simple. Cocoa, sugar, soybeans, corn, and wheat. There are more, but I don't think anybody's really trading these anyways. So moving on to transcending highs are better, I guess, than equal highs. This is a greater than sign, but anyways. Think, why do market maker models work? So if we go to our 15-minute chart here and we scroll back a bit to this market maker model that we had last week. You can see transcending lows. You can see ascending lows like this and transcending lows like this. This type of stuff is of greater liquidity importance than equal highs because there are just as many liquidity traders on the trend lines as there are on support and resistance. Now, looking here, have your original consolidation, SMR, starts first consolidation, expansion first, second, Then you have your smart money reversal here, but that's a support line up there. That's relatively equal highs, right? Right up there. That got taken this past week on Wednesday, October 1st, which was expected. Anyways, these types of lows and highs are of great importance. They are great liquidity targets. You can take profits at each low over and over and over again. Self-explanatory. Same title. Think, how many stops are here versus there? How many stops are being trailed here, 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 each swing high versus here? How many do you think is more? As price continues to go up like this, traders trail their stops. More people enter as it's bullish, bullish, bullish. Oh, we're buying, we're buying. Stops at the low, stops at the low. If you're here, it's just at the reversal point. Things are just getting started. That's it. Things are only getting started here. So that essentially leaves one answer. This is more potent. There are more people trading the trend, dragging their stops under these lows, than there are reversal traders. It's plain and simple. Slide number 7, time frame alignment. Pretty self-explanatory here. So the 15-minute imbalance, you essentially want a 1-minute entry. So this, in this example, could be a 15-minute imbalance right here, in the middle here. Higher time frame imbalance, and on the 1 minute, you can have your SMT right here. Pretty easy. Easy stuff. Think. On the bottom here, it says think. How do timeframes communicate with one another? It is somewhat of a trading myth that this happens. I do think some timeframes line up better with others. It's just more clean. Now, that being said, this type of stuff does work. Time frame alignment does work. I've seen it and I somewhat trade it. So, 8th slide. Time frame alignment, same thing. Real chart example. These are real screenshots taken of real charts, right? This is a 1 hour time frame. This is a 5-minute time frame. You have your SMT within the gap, and you have a lower time frame entry, and you take off. Taken on June 26, 2025. Go check your charts. 5-minute chart in ES. True opens, 9th slide. Boom. True year open you use on the weekly time frame. First Monday of April. That's the true year open. True week open, 4-hour time frame. Tuesday's open / Monday at 1800 for New York time people. Make sense? Cool. True month open, daily time frame. Second full week of the month's open. Now, what we mean by full week is sometimes this second week can be like a holiday week or something like this. Like if there's a holiday in there, it doesn't really count. It gets a little sticky around the holiday weeks. But yeah, second full week of the month's open. True day open, 1 hour to 15-minute time frame. Midnight's opening price, midnight. Easy. That's New York time. Pretty self-explanatory. We went over that previously on the chart here, showing that the midnight candle here is the true open. Now, true session open, 5-minute time frame. We have everything listed out here: Asia TSO, London TSO, New York TSO, and New York PM TSO. Right. 7:30, 1:30, 7:30, 1:30. It alternates. True micro session open, 1 minute to 30 seconds time frame. 22.5 minutes into each open of the micro session. Right? So that's an hour and a half, which is a 90-minute cycle, split into quarters. 90 divided by 4 is 22.5 minutes. Makes sense? So that means 22.5 minutes. So that would mean at 7:52.5 Asia session, that is the true micro session open. Last slide, diving into the DFR. We'll get more into this as the slides continue on. The DFR dictates how the rest of the cycle will play out. Very self-explanatory. The DFR is found by dividing Q1 into thirds and only paying attention to the last 2/3 of the quarters range. By omitting the first third, you have now been left with the true range of quarter 1 that will be referred back to for the rest of the cycle. The most important levels of the DFR are the high, low, and equilibrium. Equilibrium being 50 level. Same thing, 0.5 on your fib. Pretty self-explanatory, pretty easy. You can do this, put your fib on your chart, mark your DFR. So we'll do this right now, actually. So we have our Asia session lines here. Asia session charts here. Asia session ends there. And there and there. I think that looks correct. Right there. Perfect. So you would put your fib where? This low to this high. Makes sense? Pretty easy. Really easy. The 50 level is sensitive. Look at the bodies holding up 50 level, right? The high gets swept, then the low gets swept, and then the negative standard deviation of 1, because DFRs work on zeros and ones, obviously. So 1, then 2. This would be 0, then -1. Makes sense. So this is just a standard deviation of the DFR. Lines up with this liquidity, and we get tapped perfectly right there. And they actually get used as support to head lower here. So yeah, lots of ways to use the DFR. Very useful. I know a lot of traders that use it. Going back here, that is going to wrap up this video. Went over 10 slides of my quarterly theory PDF here. Pretty easy stuff, right? Nothing too complicated. As the slides progress, we will likely see more complication in there, but again, nothing that you can handle. It's pretty easy. All right, that being said, I'll see you guys in the next video. I hope you enjoyed this. This has been all concepts, all free. I'll see you around.